As traders, one of the biggest problems we face is that we get distracted. However, do these three things and your analysis will be fast and your trades will mostly be successful. First of all, stay focused by cutting out the noise. Secondly, follow a clear process with a checklist at hand. And thirdly, understand the bigger picture, put things into context. In this video, I want to walk you through all three of these steps, so let's get started. Number one, stay focused. For that, I say you do need a watch list. Just understand, there are distractions everywhere. Some indices, some crypto, some stock is always going to move. So you have to cut out the noise. And for that, you can just have your own watch list. These are the things you then want to focus on, and you won't care about the rest. What's on my watch list? I want to have the dollar index on there for context. Then the main indices for me, these are the S&P 500 and the Nasdaq. And with respect to crypto, the two main ones, the big BTC and obviously the main altcoin Ethereum. Now, why the DXY if personally I don't even trade it? I already said I want to have it for context, so let me give you two examples. For example, if we focus in on this area of the chart, this is the DXY, we see that the DXY formed out its absolute top on the 28th of September 2022. And then after a strong bullish daily trend, we had our first real market structure break on the 27th of October. And then again, market structure break and real confirmation of a bigger downtrend on the 11th of November. What happened in the S&P at around these dates? On the 28th of September, we basically started to build out our bottom. On the 17th of October, the bottom was in. And on the 11th of November, basically on the 10th already, I'd say you would have hoped to be long in the S&P 500. Where are we right now in the S&P? We don't know whether this move is going to continue, but there are first signs that we might pull back in the S&P 500. Going back to the DXY and my second example to illustrate why I think context is really important is that we are in a bounce area in the DXY at the moment. If you have a look at the weekly chart, this becomes even more obvious. We are in target box areas. We have a daily fair value gap underneath us. We are looking at weekly and daily liquidity underneath us. So we don't know whether we are going to bounce immediately at the start of next week, whether this decline is going to continue for a bit more. However, the likelihood of us bouncing in the DXY is very high. In other words, the likelihood of us pulling back in the S&P 500 also is quite reasonable. How the DXY can help you time entries even more precisely in your trading is a topic for another video, but understand the correlation. So let's continue with step 2, a clear analysis process. If you want your analysis to be fast and efficient, you need exactly that, a clear analysis process. And that means use a checklist. Let's go through one prepared analysis rundown with the example of the S&P 500, and then let's also have a look at some live examples where I will show you how you can very efficiently and also quickly run through different assets you want to analyze, different assets that you have on your watch list. Right, what do we see here? The S&P 500. The first thing you want to do is have a look at the daily trend. I have already marked out some levels here. As you can see, this would be the aggressive higher daily low. And then obviously you have the real higher low on the daily, I would call it. Why the real one? Because if we look at our last move up, this is exactly where we wanted to go to, the target box, golden zone 618. Now that we've established that we are bullish on the daily time frame, we want to go down to our target leg time frame, basically the 4 hour. And on the 4 hour chart, then see where our target boxes are. You see the target boxes marked out here already. How did I come about them? Well, easily have a look at your fib projections. You can take your first fib here, and the minimum you would like price to pull back is here from our last leg up, and this would give you around 4,018 at least. Step 3 on my checklist always is the question of confluences. I don't just want to take a trade because some fib level it can be found somewhere. I need more confluences. So let's have a look at confluences we have here. And it is quite obvious we have a lot of confluences. So our target boxes line up with 4 hour fair value gaps here and here, marked out in green. We also have obviously the 4 hour higher low. We have a daily fair value gap just underneath a daily liquidity pool, which is confluent with our lower target box. And if we zoomed out a little bit, you can see it here at the top right corner. We also have a possible liquidity zone on the daily and the weekly. And we have the weekly higher low level, which comes in at around 3,860. And that's basically all you need. These are the areas of price, and these are the zones you want to focus in on. These are the zones you want to concentrate on. In actionable terms, what does that mean? First of all, set your alerts. Alert 1 should go here to 4,016. Alert 2 should go to around 3,986. Once the alerts go off, you know you are in your target area. And now on the 4 hour time frame, just make sure that you find what we are always looking for, at least with this strategy. Once inside, we want market structure shift and then go up. Basically, here would be the first possible entry. And whether this happens in the upper target box or whether this happens in the lower target box is nothing we can control. However, we can react once it happens. If it doesn't happen at all, not that bad either, then simply we don't have a trade. But we might find a trade with one of our other assets that we are focusing on. If you are interested in a more detailed explanation of the strategy I'm using here at the 90-day trading challenge, then check out my shorts video on 7 steps to entering amazing swing trades. You can find it here. And before we come to step 3, to make your analysis fast and also mostly successful in your trades, let's have a look at more examples. Let's quickly go through my watch list. Next on our list is the Nasdaq, so let's have a look. First of all, we want to go to the daily time frame. What can we see? We are definitely bullish. So let's mark out the latest daily low we have here. Again, this is the aggressive higher low. Even so, we have to say here on the Nasdaq, it's a lot clearer than it is on the SPY. You can also mark out the next higher low you find further down. And with that, it is clear already that we want to look for longs above all. Go down to your target leg time frame, which is the 4 hour. Take your fib, and surprise, surprise, what do we get here? Our target box lines up with our aggressive daily higher low. Interesting, isn't it? Let's mark it out. Let's have our second projection from further down. As you can see, indeed, very, very similar to what we've seen on the SPY. No surprise, as all of these markets normally move in tandem. Now that we have marked out our target boxes, what about confluences? Here we could first of all look for fair value gaps. Obviously we have a fair value gap on the 4 hour here. However, we want to focus in more on these target boxes. And what do we find here? First fair value gap lining up again nicely with our first target box. If we go further down, yes, we have a fair value gap that hasn't been interacted with yet. Down here as well, second piece of confluence for us. Sticking to the 4 hour, we can then add a pool of liquidity down here, mark it out as 4 hour wicks, and obviously around the same area, we just simply have the 4 hour higher low. If you wanted to participate more aggressively in the 4 hour trend, you could also mark out 12,027. Zooming out to the daily, we then see that we don't only have a fair value gap on the 4 hour here, but interestingly, also a fair value gap that hasn't been completely closed on the daily time frame. We have one up here as well, which definitely, I guess, will be interacted with in the new week. So even so, it's not really what we're looking for a bigger pullback. For analysis sake, let's also mark it out, because definitely this area should be interacted with if there is a bigger pullback. On the daily, it then also becomes clear that our 4 hour liquidity basically can be marked as daily liquidity, makes it stronger if interacted with. We have more daily liquidity right above us at around 12,337. And a whole area where price hasn't been too much yet on the daily time frame. Could this be of more interest? Well, you just simply project your fib again. And you see the 786 also comes in here. So we can assume this liquidity to be run before a potential pullback. However, using our 90-day trading challenge strategy, we mainly want to focus on longs in any of these areas down here where we find strong confluences. Finally, let's also zoom out to the weekly and see if there's anything that interests us on this time frame. And yes, indeed, because now we can add that this is not only daily, but above all weekly liquidity, which of course makes the level even more interesting for us. So basically you could then also show this by changing the color. And finally, what do we see down here? we have a weekly fair value gap that hasn't been interacted with. Should we get down there, we can expect some kind of reaction in this area. Right, where does that leave us at? For this, obviously, we want to go down to the daily or even the 4-hour time frame, because this is mainly the time frame we want to take trades on. And we then see that should we really run this liquidity down here, by then being in a 4-hour downtrend, we could actually fill in this weekly fair value gap, have a possible trend change down here before moving up again. And while doing that, not even break the trend on the daily time frame. So it is always the same drill. Come to one of your target boxes, put an alert here, put the other alert here, and then wait for price to get here. Then on the 4-hour time frame, have a market structure shift, enter here. Or do the same thing down here. Price enters the box, you have market structure shift, pull down again, and you take the trade around this area. You see, it is really just a pattern that repeats and repeats time after time. Now that we understand what a clear analysis process can and should look like, let's finally come to secret number 3 of achieving a fast analysis that can also offer successful trades. Understand the bigger picture. For that, I would like to go back to the S&P chart and obviously also zoom out at least to the daily time frame to get exactly that, a better perspective. This is what we are looking for. To have the bigger picture in mind is in general essential, but can also help you frame the 90-day trading challenge that we want to master. What I mean is that in trading, we shouldn't only consider price, we also have to consider the time aspect of trading. For that, think not only in days or hours, think rather in quarters. Thus, the 90-day period of the 90-day trading challenge. To illustrate what I mean by that, let me show you an example that I have prepared. What are we looking at here? We are looking at the latest 102 days marked out here, basically the time since we bottomed or supposedly bottomed, right? Obviously, 90 days, 100 days, we're talking of a rough estimate, but what becomes clear is that we would have, according to our strategy, participated in at least 2 bigger moves, up, and even so we didn't quite get to our target box, we at least would have considered a second move here up. Now, whether the next 90 days will also be bullish and give us more long opportunities, or whether the next 90 days, roughly the next quarter, will result in being rather bearish and then offering short opportunities, we don't know. What we must understand in trading, however, is that price is fractal, and with that it will offer you a certain amount of trades roughly with respect to the different time frames that you choose. In our case, we're trading the daily time frame. In other words, if we follow our strategy, we should have been in this move up, and we should have at least considered taking along here. To refine this idea, you can simply zoom in to the 4-hour time frame, and then it becomes clear that not only did you have the opportunity to go long twice, but various times within this period of roughly 90 days. Consider this opportunity 1. Then you can consider this trade opportunity 2. and potentially even opportunity 3. Then the same goes for the opposite direction. Yes, you don't really want to short. However, if the 4-hour time frame is broken, you may as well consider a hedge down to your target box. You never know whether you're looking at a real market structure shift on the daily time frame or whether we are just looking at a pullback. And once you're back in business, even if you missed this entry because the target box wasn't really reached, at the latest you entered the trade again here. In other words, and that basically is the quintessential idea of secret number 3, do not FOMO. There is never any need to FOMO. Let price come to you. Pick your trades when they are ripe to be picked. I guess this should really then conclude today's video and the idea of today's video. So let me sum up the 3 big secrets for a fast and efficient analysis process one more time. First of all, stay focused by cutting out the noise, meaning have a watch list. Secondly, follow a clear process when you analyze the charts, meaning you have a checklist. And finally, understand the bigger picture to avoid FOMO, which really isn't necessary. If you want to find out more about the 90-day trading challenge that I have just launched, then watch the video that I will link to here in this video of today. Also, if you found any value in this video today, then like and subscribe. Obviously, comment. Let me know what are your secrets to being successful or becoming successful as a trader. Let's share. Let's communicate, let's thrive together. And with that being said, I'm out for today. Have a good one and see you soon again. Bye bye.